What's good? What's good? I'm gonna give everybody a second to get in here. Sorry on the late stream today, guys. I had some other stuff I had to take care of. Yeah, today was I didn't trade today, but I just sat down at my desk about 20 minutes ago, and looking back, it was a pretty clean day. I mean, the PM session was iffy. Like I could have seen, I probably wouldn't have taken it, but I'll go review the setup that was there. I mean, there wasn't really an entry if you use fair value gaps, or if you use fair value gaps to confirm things. There was a little opportunity up here. The morning, on the other hand, was pretty clean. I appreciate you, Sensei. Yeah, so really when we came into the morning here, I'm just going to go on ES and go over it. We have to remember when we gave this bias on Monday, I will say I wasn't very, I didn't say for sure. I said I was leaning bullish, but I did, I wasn't very, I guess 100% in it, but it seems like that was correct where we were leaning. So that's good. And it wasn't really that hard. I mean, it was just that we came under these lows and we took out all that liquidity, and now price is going to draw back up. Now, where is it going to draw back up? Well, it's going to draw towards areas of liquidity in a premium overall. But as we've seen in the last range, we came back up, filled a gap here, saw some retracement back into this order block, kind of consolidated there, recapitalized the order block, and then started expanding up. And as you see, once it really gets going, it's hitting these imbalances, but it's not really, stopping. And the reason for that is it was going to rebalance the weekly range. So when we're looking at where we're at now, similarity I see so far is we just took out that weekly low, just like we had over here. And we take it. You can't see it because on ESC, but just trust me, this took out a lot of lows, as we know. So I see two potential scenarios. I see us coming down into this where we're at now, and that this could be something of this nature, right? Because we come down, we make this range, and then we revert a little bit up, but then come down again, and we take that sell side. So after we take that sell side, oftentimes that's when we truly come up and purge out all that internal liquidity within the range. So I think that that's a potential. And we could be coming up into, if you notice here, we kind of came up into an order block and then moved to the downside. I think there's a potential we might see something of that nature here in this area. Now, if we don't start to see reversals there, that will tell me the market is indeed drawing up higher. We've got a weekly order block right at premium of this range. Well, right under premium. And then we've got a massive daily fair value gap. And this is that CPI dump. So I think whenever you come into the morning and you see stuff like this, you have to be real with yourself. If you're trying to short and you just look at this as a scam pump, and I see it all over Twitter, everybody's just like, everybody loves being bearish down here, right? Now, the problem with that is we're drawing to the upside. We're drawing into these imbalances towards that equilibrium. So when you came to the market this morning, you look at this, the market is showing a very clear desire to draw higher. So you have to ask yourself, what's it drawing towards? Have we hit somewhere that we might reverse from? Not really, right? Yeah, we kind of came into this weekly gap. You could have paid attention to that. But overall, I think the price was kind of drawing to the upside here. So whenever you have that context, you can jump into your 15-minute, and we'll just mark up 8:30. And you can even mark up 9:30. That's where we started to move to the upside. Now, if you see at 9:30, I'm just going to move this over to 8:30 just so we can see a little better. Yes, the initial move went up, right? So some people might have looked at this as a short opportunity. Well, it makes sense. Like I could see it. You take some liquidity right here. But let's be real. Is that really displacement? Is that really a crazy move? Does that look like manipulation? To me, it really doesn't, right? So yeah, there might have been some kind of short opportunity. I think ICT actually even posted a video. There was something here. I mean, I'll be honest with you, I probably wouldn't have taken that just because this didn't get a structural shift. I know it did clear a lot of liquidity and show desire to move away, but to me, I need that structural shift, and this is just too wide of a move. I guess there was a short there if you looked at it like that, but I think a lot of people, they looked at this, this is the break of structure and wanted to maybe short from up in here. I know that's a mistake I would have made at times. But whenever we're looking at it in the context of the daily bias and where is this daily candle likely to draw, we've established that it's likely to move up. So our eyes are going to be more peeled for sell side raids more than a buy side raid. Now, we can also look at this displacement. Now, this is something I can't stress enough, is you got to understand displacement. And this is one of those things where it becomes discretionary, and your strategy needs to be as mechanical as possible, but let's be honest, there's always some form of discretion in your strategy. Now, while it's best if you limit that and mitigate all areas that are discretionary and try to substitute them with a mechanical execution, there's always going to be something where it's up to you as the guy in the chair pushing the buttons. What do you deem as a confirmation of your mechanical model? So for me, displacement is necessary, and displacement can mean a lot of different things to people. Now, somebody who is a bear coming into the day, they could have looked at this as displacement, because I mean, it was a pretty big move, right? When it was happening, it probably looked a little crazy, right? As soon as the morning, and you look for the liquidity to get rated in the morning, you say, oh, here it is, 9:30, easy money, right? And maybe it sold right on here, looking to go lower, and we obviously know what happened there. Now, that's the importance of understanding your daily bias, because it's clear we're drawing to the upside. Now, when we're talking about ranges, yes, we had shown somewhat of a desire to move down from this premium. Like if we erased all this, you'd say, okay, well, price is coming back down into a discount, just looking at the range. But again, this is the 1 hour time frame, and you have to look at everything in the context of the higher time frame. So yes, I could see that narrative, like we got a shift in structure down, right? But what was that shift in structure doing? It was just rating liquidity so we could play out this higher time frame narrative. So if we look, what did this massive push in the morning? And another thing too, look for those reversals at 10. Most of the time they're around 10, right? So we see that we took not one, but two areas of liquidity, right? Barely pipped that one. Those are some equal lows. Now I think it moved into a fair value gap a little bit. Oops, wrong tool. I can't say that would have been really much of a component of my bias. I mean, you could pay attention to that, but I would have used this already mitigated. I think the real reaction was off the sell stops at these lows. So remember, when we're bullish, we're just looking for a rate of any low with that sign of displacement upside. So now, if you look at it from a bullish perspective, a bear was looking to short here, and they're ignoring all this. But what do we have over here? Got a couple pretty choppy examples of a market structure shift. To me, this wouldn't have provided an opportunity, because that, to me, I mean, yes, it's a move, but you see these wicks, it's kind of, it's not very exaggerated. It's not leaving imbalances. For me, an easy way to determine if I want to take the trade or if I'm confident in the market structure shift is if it's leaving an imbalance. So we don't get it there. But if we look over here, remember, we're just looking for a shift in structure. We're looking for the market to take out a high with exuberance, leaving fair value gap. So what happens right here? Right there. But if you had the wrong daily bias, you're waiting to short up here. And that's totally reasonable. Like, I see it. We took a high, shift to the downside. But, how could you have stopped yourself from doing that? Well, for one, your daily bias. For two, you got to understand that the liquidity raids don't only require displacement coming out of them, they need displacement coming into them. And when we look back, now in hindsight, where's the displacement at? Is it these three little wick candles? No, it's right here. It's that big down candle, diving into those sell stops to where it's scary and you don't think it's going to reverse. So, that could have been one long. Now, where would you have taken the long? It's funny. I always pick the funniest days to not trade, or maybe it's just because I'm seeing it so clearly in hindsight. This was a very nice opportunity. Now, you could have put a stop loss here. I would have probably put mine here just because that's my style. I like putting under the liquidity low. But now, when you ask yourself, where are we going with this? Because this is a little tricky, because you look at it like, okay, well, we're in a premium of the range, and we've kind of showed desire to move down if you're looking on in the sense of just the 1 hour. You might say, okay, well, I'm just going to take it to, premium of the impulse move. Now, if we look at that impulse move, it's really not that far, right? We look there, and you could have just taken it maybe to somewhere in here, maybe this fair value gap, and that would have been a great trade. 2.3R is an amazing trade, especially when it's this quick. I mean, that was in an hour. That's your daily goal in an hour. But when we look at the structure here for what it is based off the daily chart, if we know that the daily chart is just drawing higher, and we're in the context of that, and that's what we're operating off of, all of these little down moves that might show, if there was no daily draw right above us, this might show desire to move down, and that's going to get violated a lot of times if it's not in the context of the higher time frame. So for instance, if you notice the 15-minute range being inefficient and not reverting back to a discount, it might be because you're so close to rebalancing the daily range that price is just rushing there. Because you got to think of this area again as a magnet, right? Whatever you think your daily draw is, you got to look at it as a magnet. So the closer price gets to it, the harder it's going to be to run down away from it. So yes, there's equal lows right at a discount. Yes, the ideal setup would have been for us to just dump down to it, then revert and move up. That would have been efficient price action. But we have to remember we're operating in context. That's why it's important not to get tunnel vision on one time frame. So now looking at targeting, I mean, one could have targeted this whole thing. Now, I think that's a little crazy, right? Maybe you left a runner, but now what would be the main target to where we want to shave off most of this position, looking back, these equal highs? Because you want to look at that first very obvious area of where a lot of stop losses are, right? Now, of course, another one is the previous daily high. And on a buy day, oftentimes we're going to take that. We talked about that last week. Now, what I would have probably done was been fully out here, and there's more equal highs right here, all in this region, relatively equal highs. It's just going to be an area of liquidity. Now, maybe if we look back, this wasn't the cleanest. Honestly, in hindsight, I say this, but the more I think about it, I probably would have just taken that, and that would have been a beautiful trade, right? So this morning actually gave a really nice opportunity, but only if you look at it in the proper context and your perspective isn't skewed by a narrative you've developed without taking the higher time frames into account.
Tell him, Casper, tell
him. So, the morning was pretty clean. I wish that it's funny. I feel like it's one of those grass is always greener things that every time I take a day off, because I trade most days, but every time I take a day off, like consciously, just like, yeah, I'm not trading today, I come back and I'm just like, oh, that was so perfect. It's probably just psychological, but so the morning session was very clean cut if you were looking at it in the right perspective. And I'm going to get Bitcoin in a second. I got you. So the afternoon session, on the other hand. So
it was a great day.
Yeah, it looks like it was fun. So the afternoon session for me, I wouldn't have probably taken anything here, but I'll show you. I see it now, but I know myself. And while I do look for that liquidity raid after 130, so we just look at what area of liquidity is attacked after 130, and it doesn't have to be a major range. It doesn't have to be craziest area. It's just any swing high or low, and especially if it's pro bias. Now, the only time I really look for a reversal is if we met something like the previous daily high or the draw on liquidity during the AM session, but we didn't. So at this point, the bias is still bullish, even though, yes, we've ran all day, even though, yes, we just took out equal highs, right? You're still going to lean bullish. Now, you won't force along, but if you see something like this, price diving down, again, we're on the 5 minutes, so we're going to look at it in the context of that highest time frame. What is price doing? It's moving up. Even though these little moves, what are all these little moves? They're buying opportunities, right? Price getting rebalanced. equal lows taken, order block right there. You see? But you have to look at it in the right context. That's why bias is everything. So once we came down here, I usually use the 1 minute for execution. And looking back, I mean, I'll just be honest with you. This to me wouldn't have been it. Even though I look back and I'm like, okay, well, that was the sniper entry. I wouldn't have taken that. I really wouldn't have. I know myself. I can't sit here and say, oh, that's the entry. Or, I mean, I guess it was, but I wouldn't shift my strategy. When I back test or if I am in the market and I make a mistake or something along those lines, I always look back and see if I can mitigate whatever caused me to not capitalize or to take a loss. In this situation, I really don't see that because I know that this pattern right there, that's not a very probable market structure shift for me. Right? We did have the displacement down into it. Yeah, it moved up, but it kind of just halted, barely pipped the high. I wouldn't have taken it. Now, when we look again, is this a more displaced shift? Yeah, it is. And then we have this tiny fair value gap. So, I mean, again, I'm just being honest. I wouldn't have traded here, but I see it now. I don't think that the PM session was that clean cut for me. Anybody looking in hindsight can see that, but personally, I probably wouldn't have taken it. It'll look something like this. I mean, if you caught, we'll say this one because that's really the only displacement and where you've got a closure or anything like that. Something like this, and you would have just targeted the previous daily high. And this has been a setup I've seen pretty apparent with indices. Once we're moving in a clear direction, the afternoon session is oftentimes going to give longs up to the previous daily high. And we gave, or previous daily low if you're bearish, but we gave bias about this, I think it was yesterday or the day before. And we did exactly as we thought. So again, everything is about perspective. You can know all the entry models in the world. You can understand what a fair value gap is, an order box breaker. You can understand all that market structure. But if you don't understand what you're operating in and know how to read the room, it's literally going to be not only useless, but detrimental because you're going to be trading against, you're pissing against the wind, as Playboy would say. So that's really the recap for me on indices. That's the two clear trades that I see with my strategy. And I shouldn't say two clear, one clear trade in the morning. But that's how the afternoon price action kind of unfolded there. Again, I wouldn't have taken it. So we're just learning together, looking at it like, okay, the main thing I take away from it is if you're very confident in the bias, right, and you're looking for the upside, then filter out, reasons to look for the downside. Because a lot of people, maybe they're looking for the downside, they might have looked at something like this. And this is how the AM model is difficult. Because you say, oh, we rated liquidity after 130. If you're looking at a 1 minute chart, obviously we didn't on the 5 minute. And you can finagle this around to where, oh, this is a short. I get pictures on Twitter and in the Discord of people doing stuff just like this. They're like, what? This didn't work. And it's just always looking at things in the wrong context or like marrying a narrative and just you're so tunnel vision. You have your blinders onto that narrative. So Bitcoin. Bitcoin moving kind of weird. It's showing a little bit more weakness in my opinion than indices. But I think the overall draw is still this imbalance. Right, this day has shown desire to move up, but it's having trouble getting up there. I think that has to do with indices starting to piss a little bit after they took that previous daily high. You see, that's kind of when Bitcoin started to falter. I see this order block that's getting a little 3 drive into it. Probably, yeah. And again, Bitcoin is never really as clean cut. I wouldn't consider this that shift in structure just yet, but I mean, it might be. Now, if indices do kind of revert a little bit, right, and rebalance, then I would assume Bitcoin will do the same. Bitcoin has a pretty wide range. I have this high and this low. So when I look, we have this little range right here. We can just mark the whole range for now. But I see price digging into it right there, but I'm not sure if that's going to hold. Now, the overall points I'd be watching here, if I was watching corn, I would just watch maybe something here if it shows desire to go up, but it doesn't seem like it is. And if not, maybe something in there in this candle, but you might want to, Bitcoin might kind of come down and take these lows out. But again, I've told you guys, I'm not really watching Bitcoin until we get to one of my high time frame areas, because I used to sit there and just try to force it and just always look for a trade. And guess what happens? You're just sitting there staring at this while everybody's making hella money trading something else. So until we get to my area where I think that it's going to be a higher value, I'm just hanging out. So I think the overall draw is still this imbalance. We might end up reverting a little bit, cleaning out some liquidity before moving into it. And after that, I would look for more downside. But it's all going to be in context of indices. So overall with Bitcoin, you guys know, anybody who has sat with me for a while knows how my opinion, so I'm not going to continuously regurgitate it, but just stop watching this all the time. It's not worth your time. It's just not. Like, look at this kind of move you have here, and then look at indices you have. It's just not the same. So overall, I would look for potential reversal really where we're at up into this daily draw on liquidity, or potential reversion down to a discount to clean out some of this internal liquidity before moving to the upside. It's really just, again, you're just depending on indices. Bitcoin is indices, a little sidekick. So I read some of these comments. Yeah, right. So can someone please wake up Bitcoin? What's up, Adaliki? I appreciate you too, Nicholas. So I said, if I'm in an NQ long, do you think it's reasonable to let it run for the fair value gap towards 11,900? I mean, bro, I'm just going to be honest. I wouldn't do that. I think that's kind of just like pushing it. But, don't come back and hate me if it does go there. But I never hold it. If I'm in and out of the market with indices by 4 p.m. I don't hold shit past that. Never. The way I look at it is like there's plenty enough. That's like last week's open. Oh wait, no, it's not. But anyway, there's plenty enough of money you can make during intraday moves. Indices will take it just as fast as they give it. So
and you trade only during New York session, right?
Yeah. And that is another thing. I'm glad you said that. I don't know. You might have good success. There's always going to be someone that's like, oh, well, I trade indices during Asia session and it's fire. But I'm just like, here, let's just do a little case study. Where do you see the value at? Which color? It's pretty clear to me, right? So I don't really see setups happen that are inequality here. What happens here? Oh, you move down, try to maybe short here. Or maybe you get in some crazy position. But I don't see it. I see the big moves. And this is just the AM of New York. This is just 7 a.m. to lunchtime. That's where all the big moves happen. So it's all about time efficiency and not burning yourself out. And, less is really more. One thing that funded trading has made me a lot better of a trader because of is realizing that, I don't have to sit there and trade all day long, and I don't have to catch every move. And it's worse for your mentality to do that because you become like an addict to trading. Even if you're doing good, if you're just trading nonstop every session, and I get it, it's exciting when you start, but it's not good for you to do that. You need 1 or 2 good trades a day. Some days are going to be losing days, and if you only are trading, a select asset class, and you're only trading one model at one time of day, or maybe 2, if we go into the PM session, chances are you're probably not going to take more than 2 losses in a day. And if you do hit, you might take 1 good win and then be done. Or if you take 2 trades, which I think if you take 1 in the morning and it's good, you don't need to take another. But if you take 2, then you have a great day, right? You have 2 of those days early in the week. Like this week, I'm done trading. I'm not trading the rest of the week. I had a great day on Monday, a great day on Tuesday. I probably would have traded today if I didn't have stuff to do, but I'm done the rest of the week now. There's no point for me, right? There's probably going to be a great setup tomorrow. Who knows? But I don't care, right? I know there's another week. and there's another opportunity that you're going to have. But if you can, get into that mentality where you look at this as a very time efficient business where you're working, that's why I really like indices. And I used to trade crypto, so your trade, your alerts are hitting in London session, in Tokyo, New York. I will say crypto has become a lot more heavily reliant on stocks lately, but the benefit that I see with indices is I only have to trade it during certain hours of the day. Now, why would I go and ruin that benefit and take more risk by going and trading sessions where the market's not even open? Right? Just like make it make sense. It don't make sense. It doesn't. Somebody said XRP BTC. Are you asking me to asking me to do like the pair, like XRP against Bitcoin? I've never looked at this. Oops. I don't know if that's what you mean, but I'll take a look. Looks kind of similar to XRP's. What's it called? I mean, it's pretty crazy here with all these wicks. Yeah. This is a pretty fucked up chart. Well, I mean, see some like trend line liquidity building up here. So I would see more upside than anything here. It's not the prettiest chart though, I will say that. I mean, it reacts nice to certain levels, but I mean, the overall structure to me would be this and this. So you're operating within a bearish range where you've taken out literally everything to the upside. So just looking at this, I mean, I don't see a ton of reason to just go up and take that. But overall right here, I would see more upside before down just because that trend line that has been kind of developing right there. So that'll probably get taken out. Now, I'm not sitting and telling you to trade the breakout. I'm saying it's probably going to drop to that liquidity. So again, we're just talking about where is price drawing to. You got to think of like price like this. If we have, a range and then there's a bunch of money up here, right? There's tons of orders. And then price is doing this. It might hit a supply zone from over here and give you a choch or whatever. And you're going to short. Well, what's going to happen is it's going to just tap into, because remember, price is just bouncing between areas of liquidity. So maybe once it hit into that area, it was drawing to something down here. Maybe there was a fair value gap, something along those lines, and here, and it's going to ping off one area of liquidity, and then guess where it's going? And maybe there's a ton of orders far away, way down here, but it's going to go up to here first. Just think of it like there's like magnets, two big ass magnets, and wherever there's more orders, that's a more powerful magnet. Until price taps that, once it starts getting close to it, you're probably not going to see it move that impulsively away from it. Could someone wake up Bitcoin? Yeah, right. I agree. Another confirmation for me to buy was we rated yesterday's low before that reversal for NQ. Well, did it take the previous daily low? Maybe was it a different session or I don't know. Let's see. Oh yeah, well, right, actually, yeah, it did. Kind of a weird. Actually, really nice. I didn't even notice that, to be honest. Did ES do the same? It did. Wait. No, it didn't. I'm blind. NQ, that's weird because it's like the low kind of was just a regular. It was just midnight kind of started. But yeah, it did take the previous daily low. So that's a good eye on that.
You've seen Casper, but the indices, if you look at the actual indice itself, we never took the low, the weekly low. It's there's a divergence between the indices and the futures contracts. The futures contracts took the weekly low. The other one.
What chart are you talking about?
Just a regular like a NASDAQ chart, which would be NDAC, I think. instead of it being like futures, it's the regular
Yeah,
one,
yeah.
and we never took that weekly low. Like, so it's like the divergence. I forgot which chart it was, but it's all indices. IWM, which is the Russell. You can
2000.
probably see it on the Dow Jones and stuff like that, which is curious. I didn't notice until I heard it from one of my boys on the stream
Mm-hmm.
that he brought it up, and yeah, that was pretty interesting.
It's interesting. Well, the only thing is that I will say, like, if you look at these charts, they're nothing alike.
Yeah, they're nothing alike. It's fucking weird.
I've never really looked at anything except future, just because that's where most of the money's at. But I mean, this like doesn't look anything alike. Like, look at this. It's like literally like nothing. Like they don't even look like the same pair. Like they almost look like a fucking inverse of each other.
Yeah.
Or it looks like this one's about 2 months behind.
Yeah, it was something interesting that I heard, and then you know, they showed me on the chart. I was like, oh shit! I heard it this morning at like 4:30 in the morning. I was like scrambling to check it, so I didn't really trade this morning, but like take Tesla short, and that was it. I was gonna take the indices long, but I like missed that.
I feel it. Somebody asked about Matic. So I think Matic is going to be drawn back up into. I mean, it's Matic's kind of iffy here because you could look at it in the perspective of that we came to a premium. But when I look at this, I mean, I don't really see us really taking out any internal liquidity in a premium. If I'm just looking at the weekly chart, I see this as a very valuable area. And I don't see, obviously we didn't go up in there. To me, there's nothing really here, right? Except maybe if you're looking at supply and demand, but I don't really look at that when I'm talking about draw and liquidity. So if we do start to see bullishness, I mean, we've came here. If we go to the daily chart, pretty clear market structure shift here on the daily. So just like we use the 1 minute to confirm the 15, you can use a daily to confirm a weekly. If you look right there, a very distinct shift right there. So looking at that, I mean, I think Matic looks pretty good. I think everything looks like it wants to rally a little bit. So you could maybe start building long narrative on Matic. I would like to see this daily close without making another low. And then that would actually be a very valuable region that if it leaves an imbalance here. Like if that leaves an imbalance there, I would probably look to build longs around that. So this is one of those things where I don't even need to look at it past the daily and weekly chart. That's everything I need to know right there. So if you close a day today without, which you probably will, unless everything starts dumping, without making a new low, you'll have a draw or a target where you could wait for price to come back down into, maybe wait for a liquidity rate during session tomorrow, maybe start to look to build longs. Targets would be like this right here, and then you've got this imbalance up here. You could also target intraday. You don't have to take it all the way there, but I kind of like this actually. Does not look bad. Oh, so you meant XRP, bro. I got you. When you said XRP Bitcoin, I thought you meant against Bitcoin. I think XRP is drawing pretty clearly up. I think this order block is right now the draw. You could look at this, maybe this imbalance, if you look at that, but I look at it as price came up, showed heavy desire to move to the upside. We hit a daily and weekly fair value gap, normal retracement. You got on like a 4 hour, a 1 hour, obvious shift in market structure to the upside right there. So look, just like we play on indices in the mornings, we look for stuff like this to go long. Look what happened. Price comes into it, dips a little lower, and it looks like it wanted this order block. Now it's showing desire to move to the upside again. So overall narrative here would be up on XRP. Now, what do I think it's drawing to? I think it's drawing to this order block. So until we get up and meet that area, I would have a bullish bias. Also, I'd keep an eye on this high up here. Sorry, the main high. I think that you could probably focus on this for the low-hanging fruit. If we get above that, we might come up and then you could even take the low and then move up. So again, just one step at a time. But I think overall, XRP is drawing to that high, if I can draw it correctly. So you could build long ideas around that. Honestly, I like this little area right here. I might actually start watching this because this shit looks really good. And then you have this order block right there, that candle. Overall, I think you're drawing to the upside of this high, though. On what do I trade indices? I use my funded account, which is my Forex funds, and I use MetaTrader. Oil. Yeah, that shit's been moving pretty crazy. Up only on oil right now. I have OPEC meeting. I know they cut
$99.
Yeah, they cut that that supply, and this shit just is gonna want to moon right now. Yeah, I like that 99 area right above this high too. I mean, really looking at this chart, there's really no clean areas of liquidity except, I mean, like this and that, in my opinion. I mean, there's a lot you're gonna see, but oil's kind of fickle. But if we just cut that supply that much, I mean, like you said, I think overall bias on oil would be up.
Kind of looks like a mitigation blocks forming there. You see that on the chart you were just on right there, because we have the high and then the failed swing high.
Yeah, that is true.
Lower candle, like standard ICT, right there. That's why it's like a confluence right there.
Yeah, no, I can see that. So yeah, overall bias on oil would be up. Somebody said, thank you for the insights. I guess I'm overtrading a bit. I guess you're right about focusing on getting 1 to 2 trades in and enjoy the reaps instead of greeding on more. Yeah, no, for sure. Like, it's just, there's just a toxic mindset that is bred whenever you start trading. And it's like, I mean, I hate comparing trading to like gambling. And I don't think you should do it the same, but I'll be honest with you, the psychology is quite similar. That's why if you have a really good poker player, a lot of times they're going to make a good trader. Not only because they don't cry over losses, but because they understand the psychological adversity that they face during poker, which is similar to what you face in trading, just because it is a prospective form of income where you don't know if you're making money and you're basically using a strategy that is based on probabilities. So whenever you're coming to the market and you're looking at this as just come in here and make a lot of money, you see everybody on Twitter that's doing good and maybe they're really not, or regardless, it doesn't matter. You get influenced of this false narrative that you just come in the markets, you trade every day, go hard, make tons of money every day, and when that doesn't happen, you try to overcompensate for it. Or even when it does happen, you get high off of it and you want more, and you find yourself making a little bit of money, giving it right back, or maybe giving it back and then some. And it's, whenever you haven't ever done it, it's hard to have that discipline of, a daily goal or a daily stopping point for losses, or just taking 1 trade a day or 2 trades, because like, look at all the assets that I have here. Between the watch lists I have, we've got 323, 330, 365 different assets. That's not probably the same as crypto, but we'll just say 365 assets. Now, if I sit here all day long, how many trades do you think there are in all these assets among all strategies you could use to trade? It's endless. So if you know that, and you know that you're playing a game of odds, if you just go play blackjack, and I'm not trying to say this as we're playing blackjack, but there are similarities. If you just go play blackjack 12 hours or something like that, did you make money most of the time? Probably not. Right? Did you make money at one point? Maybe, but you gave it back. So I think having the willpower and the gratitude for the small wins and the low-hanging fruit is how you build an account, and also how you build confidence, because losing isn't good for your psychology, right? And you can get better at losing, and to be a good trader, you have to be a very good loser, right? The best traders are the best losers. And I even work on that sometimes because I really don't like losing. I don't like it. Puts me in a bad mood. That's the one thing I'm really working on, right? And I mean, I've gotten a lot better at it over time, but it's not good to put yourself in a position where you do really good and then you erase it all, because that effect that it will have on you psychologically is far worse than the dollar amount that you have lost, because it's going to influence you the next day or maybe even longer, and cement bad habits to where you're stressed, you're in a kind of like a lack mindset where you're not doing good enough, and you're going to force yourself to go out and take risks you shouldn't be taking, putting yourself in trades you shouldn't be in, taking losses you're not supposed to take. And the key to profitability is not only knowing when to execute, but knowing when not to. And I think it's more when knowing when not to, because it's not that hard to get in the market and make some quick money off a good trade and then just be done, right? You always want to sit there and continue to trade, though. But it's all about day by day. And I put this quote on Twitter. It's so true. Like, somebody actually in Playbit, Haas is the one who said it to me. I stole it from Haas, but it's everybody says, or people want to trade for a living, but they trade every day like it's their last day. And that's like 90% of people. Because it's like you're just in that moment, and that the model's showing itself, and you're just, oh, I'm going to miss it. You know what I mean? And it's just like, dude, we have literally to the end of our careers to take trades. The sooner you get familiarized with the feeling of not, just watching a trade run without you, and maybe even you did TA on it, and just being genuinely okay with that and accepting that that's part of trading, and also accepting that a losing day is just another transaction, and it's not the end of the world, and it doesn't make you a piece of shit, and doesn't mean you should self-sabotage yourself, or maybe you've taken a lot of losses, but you have to understand that it all comes with trading, right? It's part of the industry we're in. It can be a very stressful industry if you let it, but you got to act like, this is your job. You're going to have some days that are going to be good. You're going to have some that are bad. And I mean, if you're very new, then you really shouldn't be that surprised having bad days. You should look at those as your lessons. So, maybe you're paying someone to mentor you, or you're paying for courses, but all that's great, but you're going to end up paying a tuition to the market regardless. So you got to look at everything as a positive outcome, like a silver lining kind of thing. Is every time you take a loss, that's an opportunity for you to reflect and to ask yourself, how can I do better, right? So for me, a good example of this, last week, I got stopped out twice at break even on the S&P once and the NASDAQ once. Both of those trades would have been 4 to 5 hour trades, but instead they were a small loss due to slippage. Pretty much break even, but they ended up being a small loss. So watching that at first, it infuriates you. You're just like, holy shit, I just fumbled a bag, right? Fumbled. You start thinking, I said, oh man, I just fumbled 9R. Oh, dude, you're such an idiot. What the fuck? Stuff like that. And then I realized, I'm like, okay, instead of sitting here and being irritated and upset about it, utilize it and make sure you don't do it. So then I said, okay, well, how could I have prevented this? Just look at it from an objective viewpoint. Okay, well, why did I move my stop loss to break even? Then when you're real with yourself, you realize, okay, well, the reason I moved it to break even was because I was scared the price was going to turn around on me and it was going to, give me a loss. But why was I scared of getting a loss? Because I know that my strategy is profitable. And I know that over time, I've proven to myself that even if I lose, that odds are at the end of the day, at the end of a series of trades, I'll have won. So if I truly know that, then why am I scared to take a loss? Why am I moving my stop loss up? So the next couple of days, I said, okay, well, I'm adding to my rules. I'm not moving my stop losses to break even on indices until I've taken profit or I've broken external structure. So now I've added a mechanical aspect and a remedy to the shortcoming that I had. So then the next couple of days, I posted on Twitter and in the Discord, then had a really good 2 days. And this week's been really good, right? And one of the trades that I took last week, and I'll show you, it would have happened. The same thing would have happened to me if I wouldn't have this one, I think. Where is it? It was on what day? 9/29. Oh, here it is. Yeah, look at this. So, and this is after I took 2 trades that I was one down here. I got stopped at break even. It ran without me. And then the next day I came to the market. said, okay, like you developed your bias. I think this was a previous daily high or something. I can't remember what the target was. Or no, it was just this liquidity. I think it was the previous daily high. Yeah, it was. And this is just like that PM setup we went over today. Price comes up, consolidates into the previous daily high on a buy day. Get that right after what time? Look, right after 1:30, liquidity rate down. After that, you wait for your model to be apparent, take a trade, and look what would have happened had I set my stop loss to break even. Would have happened again. But because I was mindful of, I sat back and I said, why are you fucking up? Like, what's wrong? What's wrong with you? Like, you know what you're doing. The fuck are you doing? So I realized, okay, it's just a fear thing of taking a loss. So I can't be scared to take a loss. And when I enter this trade, I fully accept that this might get hit. And I'm not going to let it ruin my day or let it make me upset or cause any kind of pain, because I know that maybe I lost this trade, but then the next trade will make up for it and then some. So since I eliminated that fear, look what happened. Price came right back down to my entry and then ran to my profit target. Now, I won't lie. During this, was I just totally calm? No, I was sitting there like, motherfucker. But I knew that I had to tell myself, okay, remember, you made this mistake twice this week. Don't do it again. I would rather take the loss than to see this happen. So that's a good example of understanding that losses are just more or less lessons and opportunities to sharpen your edge. Because if you're like me, like my goal is to become as close to perfection as possible. But I know that I'm nowhere near at the end of the day where I want to be, at the end game. And I know, how am I going to get there? I've done all the fucking studying in the world. I've watched the ICT so much. I've done so much shit. So I know that's not where it's going to be. Where is it going to be? It's going to be from sharpening yourself psychologically. So look at those as opportunities to do that. Somebody said, Casper, Adeliki, it seems you don't use Choch. Can I ask what you use before you take a trade apart from liquidity at New York session? It's the same, that PM model right here. You're looking at it. So liquidity after 130, I look for what liquidity is rated first. Right. So right here, we took the low. Go to 5-minute view. Any swing low to be formed or any just low, right? Because we had a candle right here that had a higher low. So this is going to be an area of structural liquidity. Not the craziest. Price plungers under it. So then, bam, I have an idea. What do I wait for? A shift in market structure, leaving a fair value gap. That's the only thing I use now. Now, I'm not saying that Choch doesn't work. I used to trade a lot off of it, but I am saying that I have fine-tuned my strategy down to this because I know that this is the most efficient and I'm most confident in this. And it's the most refined. I know exactly what time of day. I know everything is very specific. So if something stops working, most of the time, like if I'm wrong, I take a loss, it's reliant on one thing, and that's daily bias being wrong. But I have eliminated a shitload of variables because when you're trading supply and demand in every single order block, there's a lot of variables there. There's always some, oh, that wasn't the strong high, and there was still, there's so much stuff. So I know what I'm looking for, and this is the most consistent for me. So I said maybe a pullback on XRP could fake out the bull flag. And yeah, I appreciate you too coming through the streams. I appreciate you taking the time to watch them. So this is a good question. Do I use the IPDA in your trading analysis? I'm assuming you're talking about like the 20, 40, 60-day highs and lows. I mean, I don't really use them that often, but I'm anything that you're gonna get from ICT, there's nothing in there that's just garbage. But the way that I have interpreted it and that I use it is I find what I need, right? And personally, I might start, including that more. It's funny you said that because I was watching back through months 5 to 7, and I was kind of, looking at that, and I think I might start marking them, but I'm not going to really trade off them until I see how the market reacts with them, because I know where I'm at right now. I'm doing fine without it. And this goes back to something else I've talked about before. If you are profitable consistently and you don't have a hard time trading, most of the time the improvement is going to lie within the psychological factors, It's not going to be learning new technicals, because there's been times in my trading where, you know, I really went, you know, it was like I was doing good with something, and then I started learning something new as I was still trading live, and I started like fucking up, because there's that learning curve that's inevitable. But I always encourage people, if you're extremely profitable, or not even extremely, if you're consistently profitable, or you like have proven to yourself like, okay, my analysis is good, right? Like what I'm doing works. I understand it. All you got to work on at that point is the psychology. And everybody asks me, like, they're about to do a challenge, what's my biggest tips? And everybody, I tell everybody the same thing. It's all fucking psychological. That's it. It's the technical part of trading is the easiest part of trading. Adaliki said, do I wait for an obvious liquid to be taken, then a fair value gap created when a break of structure occurred, taking the trade at that fair value gap? Yeah, pretty much. That's a good way to put it. I mean, it's just, yeah, like, so I'll draw it out a little cleaner. So we'll say we've got an area of sell side liquidity. This is just a long model. So then price comes down, takes that liquidity, and shows a shift up. And this is very simple. And this is just the, you know, there's actually a meme going around of this on Twitter. But this very simple smart money reversal. So you come into sell side liquidity. Again, the time efficiency is key. You want this to be right around the London close in the morning. So really anywhere from 9:30 to 11 a.m. is the ideal areas for the AM session. And you're going to use the 15-minute chart. And again, I'll invert it. Just that's what it would be for a sell. Now, if you're in the PM, you would want this to come after 1:30, and this could just be any 5-minute low. You guys saw that example I just went over. No new techniques or strategies are required when everything is working fine. It's like adding water to a glass that's already filled. Exactly. There's a saying we have in the States, if it ain't broke, don't fix it. Yeah, on that note, guys, see if there's any more questions. And if not, I'm probably going to hop off. We'll still be streaming tomorrow and Friday, but I will, I'm not going to be trading, so I will kind of just provide commentary. Be mindful that NFP is on Friday, so expect some volatility tomorrow and the next day, and things aren't going to be as smooth or work as clean as they usually do. Odds are. And again, there's always another day to trade, so I just look at it like, why not take 2 days off? I never take time off. Yeah, and I got my birthday this weekend. I appreciate it. I appreciate you too, man. And I appreciate all you guys for coming through. Hopefully this helped. If it did, like, comment. I always forget to ask that. I'm a shitty YouTuber. No, I'm just kidding. But it does help a lot. The videos it's crazy. Like, just a little engagement goes a long way. So I appreciate you guys. And if you got any questions, you know how to get at me. Until tomorrow, be safe, and I will see you then. Peace.